What's up, guys? It is Friday, June 17th. It's 3:49 p.m. and this is going to be the market update, but we're only going to focus on one thing, actually two things right now, which is the dollar and the total crypto market cap. Well, first of all, let's start off with the dollar as far as where we're at in the trend. As far as we had went to a new all-time high and as far as the previous years. So let me move this out. Let's just start new here. So we had broken above this high back here and we went a little bit higher. So we went from 105 to 105.75, and now we've pulled back down. We've retested kind of this previous high as support like this. So we can see that, yeah. And if we even scroll out further, that back in January 2017, that was that level that we went up to. And January 2017, and when we hit this level and fell, if I show you the chart, this is January 2017 right here, before the crypto total market cap went from $13 billion all the way up to around $2 trillion, which is like close to 100x increase. Wait, 1.13, yeah, like 100x increase around there, 150. So we're at the same level as far as the dollar of when back there. So we had broken up, we hit a new high, and then we came back down. We hit this trend line. We're saying that, yeah, we gotta break down here. Is likely that we're gonna retest back up, but we need to get rejected by those retracement levels. We ended up breaking through them, which caused the market to crash even more. And now we've kind of headed back down here. And now right now the price is below where we set a high up here. So we can right now see that we have this trend line coming down like this, that when we hit our high here, it came down, rejected, rejected, rejected. And then we have this support that we could say as well too, coming down, kind of flagging like this. So I think that we might have topped in the dollar, and I think that we might be on the verge of exploding in the crypto market, because I'm going to put this retracement from this top to, this bottom, and we'll see kind of where we retrace to, right? So this is shorter term, from this top right here to this bottom. We retraced up to that 702, and then we fell lower, right? And I'm sure we could probably even see that we hit that target to a T. Close to it, this 2618. But now we've headed back up again, and we could pull this retracement from here all the way down to here, and we got rejected by the 786 right now, and then we got rejected 702, and now we're trying to break down through the 618. If we do and we break down, it would coincide with breaking down on this trend line, which would be big. It would be big, because when we break these trend lines, we do pull down more. So I'm thinking that, hey, I think the dollar's going to pull down. We have the stock RSI coming down. This is a 1 hour chart. We want to see this TSI pull down, though, back below the zero line. And we want to see the MACD go into red, and then we can guarantee that we're going to keep falling here. If we fall below 103.94, 104, then if we fall here, we're probably going to likely come down and retest 103. If we can keep falling from that point, and it's likely we're not just going to waterfall, we're going to, chop around like this, maybe come back up like that, come down until the end of June, and then by I think by July 5th we would have reached our bottom already. So if crypto markets have reached a bottom by July 5th, that means the dollar would be falling. So this is where I would see this play out. We come down here into the weekend, and then we pop back up in the dollar at the start of next week, which would because if we do pop up in crypto prices on the weekend, we'll have gaps that we'll have to come back down and fill, which the dollar rising back up next week would do that. And then by the end of June, the last week of June, we should break as far as the dollar goes. And then by July 5th, we should have reached a bottom. Why do I think that? Let's look into it. So crypto total market cap, right? We're on the 2-month chart. So every candle here consists of 2 months. So it's a very, very big picture look. And taking that big picture look, it gets rid of a ton of noise. It really is so much easier to look at the higher time frames and really predict these bigger moves. So on the 2-month chart, we can see that I'm going to grab from, actually, let me show you on the daily, just to show you what I'm seeing here, is we're taking this top point, right, to this bottom point. And if I grab this top and measure down, and I'm actually going to measure the time frame as well too. So let me take it right from this top, and we're going to measure the time and how far we go down. And it's about 72% in 262 days. So we got a 72% drawdown, and let me just write, I forget what it was. Let me do that one more time. 72% drawdown in 262 days. Okay. So 262. All right. So we have from this top to this bottom, 72% drawdown. We went from 386 billion all the way down to like 110 billion. So 386 billion to like 110 billion for the whole entire cryptocurrency market. Okay, so we got that 262 days. Now we're going to take this top, so this high point, down to this low point, and we're going to see how much. So I'm going to take from here, and we're going to measure the time too. So this top, around like 3 trillion, to where we're at now, legit where we're at now, 71.69%, around 72%, right? And now let me drag the time over. Around 220 days it's been, right? So 220 days. And we've had that same drawdown, 72%. So what I think is crypto markets are moving different now. I believe, like, you see how during this phase, well, there was a bear market back here. If I scroll out, we could probably see it more. Oh no, they don't even have the data for it. But this is back 2015, and we can see that we kind of just went, straight line up, and this like kind of pop up to go sideways, pop up sideways, like this ebb and flow was very short, and it was very compressed back here. And then when we went, we just like skyrocketed as far as the crypto market. What I believe is, and it was one of my theories that I was considering back months ago, was that the bull market has been extended by a long shot. So I think kind of these moves that we're doing, like these bigger things here, is what the current market is playing out to be. So like if we were to do, if I were to show you like something like this, right? Because this was, at this point, if we were comparing it, it's like right here where we're just getting out of the bear market, right? And this is that same point where we're just getting out of the bear market. And we kind of rip up. We rip up, and then we pull back down, right? And it's these big ebbs and flows. Kind of like what we're doing now. We rip up, pull back down, rip up, pull back down, big ebbs and flows. So that's why I think we haven't even hit the parabolic at all phase of the market. I think last year was an equivalent to like 2016, where like Bitcoin, Ethereum went crazy. A select few altcoins went crazy with it. But then there was a huge correction. And then the start of January of 2017, everything went. And I think we're gearing up by 2023 to be in that phase. I think, I don't think we're going to immediately moonshot here. I think we're going to round out, or like we'll have a snap right now. We'll round out. And by October, November, December, we're really going to pick up. And 2023, nothing was the same. I do believe that. You can see that I just pulled this back here into, and I stretch it out, and it looks like the same ebbs and flows, the same. We just looked at, and now let me get rid of all this. Okay, so we looked at that, the similar kind of patterns playing out, right? So I feel as if like we're going to see dramatic moves to the upside. We're going to see big pulls, big pull downs to the downside, but we're still maintaining this upward ladder, upward staircase kind of movements, right? And if we're looking at Elliott wave theory, you have to have 3 impulse waves. So 3 waves up and 2 waves down so you complete. So right here, we had our top. So we went into our A, B, C correction. And then we had our, our 1, 2, 3, 4, 5, which is our first wave, to our A, B, C. And then we had our 1, 2, 3, 4, 5, which was our second impulse wave, to our A, B, C, right? We're missing one more impulse wave. So that's why I believe, we're in a bear market, everything like that, but we're not in one of these type of bear markets where it's just been, I feel personally for myself, I feel like it hasn't been nearly as equivalent to back here. This was long, it was brutal, it was boring, it was more of sideways for a year after it just headed down. I feel as if we're about to wrap up the bear market right now. We're about to bottom, and when you hit a bottom, you start to have a reaction back up to the upside that is monumental. So we can see here that, all right, we had our 1 impulse wave, our first corrective wave, our second impulse wave, our second corrective wave, and we're waiting for our third impulse wave, and then we go into a ABC type of thing like that. So that's another sign as to, this bull market ain't done yet. This is kind of like a mid-phase correction. I feel like we're in a mid-phase correction. I mean, compared to Bitcoin, okay, we're at 60K. A 72% drawdown is not that bad in the grand scheme of things. Before, we used to pull 90% down. This one was a 88% down. So we're the law of diminishing returns, or the law of diminishing losses. So we'll go up less, but we'll fall less, and that will maintain because more money's coming into crypto. So it takes more money to bring it up to certain levels and more money to push it down to certain levels. So we're going to see less percentage-wise drawdowns and less percentage-wise upside. But the floor just constantly rises every year. Like I've been saying, is that floor is constantly rising. So the sooner you get in and the more that you keep piling into it, the direction of cryptocurrencies by 2025, I mean, this is going to be a decatrillion-dollar asset class. It will be above $10 trillion. Right now, we're sitting below 1 trillion. So this is an easy 10x as far as the whole crypto market. But if anything, the only thing that has $1 trillion in it, or did have $1 trillion in it, was Bitcoin. So if you have $10 trillion coming into a market where something like XRP maybe has $5 billion in it, this is where we see the $20 to $30 price points. So the 3 things that I'm seeing as far as we hit a bottom is the similar patterns playing out to back here as far as in the Elliott wave, as we did 1 impulse wave, 1 corrective wave, our second impulse wave, our second corrective wave. We need to find our third impulse wave. That's check number 1. The other check is that the time frames and the percentage drawdowns within this cycle has been the exact same. So let me show you again, because I just actually showed you, but this is a reminder, was that from this top right here to this bottom, which is the COVID crash, was a 72% drawdown in 262 days. And then from this top back in October, November of 2021 to where we just fell to was an exactly 72% drawdown in 220 days. So a little 42 days, faster. So I believe that we're going to bottom by July 5th, because now I'll show you. And also too, look at even just the similarities of this trend line of where we found our top to where we found our bottom. And it's to a T. We touch this a couple times up here. We pop up looking like we're going to go, and then we slam back down for another low, just like back here. Ooh. Just like back here, we touch this line a lot, and then we pull out looking like we're going to go, and we slam back down for one more bottom, just like back here. Touch the line a lot, come back up, looking like we're going to go, slam back down for one more bottom. So as far as the drawdown percentage, as far as the Elliott wave, as far as the time frames, 262, 220 days, in 42 days, that's what date is 42 days from now? July 29th. So I think it's going to be by July 5th, because I was looking at something else that was telling me that, I think it was, regardless, these are very close as far as the time frames. But let me go to the monthly chart and show you a little more here as far as why it looks so similar. Looks very, very similar, guys. And even if I take this trend line, which I'm just noticing now, and pull it up to like here where, you know, we found these bottoms at, like it's around the same time, you know, the same trend line. So we have our top to our bottom, 262 days, 72% drawdown. We ride this trend line, we pop up, come back down for our low right on this trend line. And then we had our 72% drawdown, 220 days, we had our top, we ride this trend line, you know, and then we pop out, and then we find our bottom right on this trend line as well too. So that's why I'm thinking, guys, that this is actually the crypto market's bottom. And I think that what we're going to see is the next phase of the crypto markets. It's not going to be a Dogecoin phase. It's not going to be a Shiba Inu phase. It's going to be the coins that have utility, that are offering, you know, real world solutions via their cryptocurrency, their protocol, their solutions. And you're going to start to see the rise of digital assets becoming integrated in the financial system and part of our daily lives. Or we're not even going to notice. Say the banks upgrade all their systems on the back end and we just see money, our money's just moving faster, settling faster. We get immediate withdrawals of our funds or everything like that. We're not going to notice what's going on behind the scenes as far as like what's going on in the back end of their systems, but it's going to be digital assets that are powering it. And with the usage and the utility being used in these assets like XRP, like XLM, that money flowing through it, plus the limited supply of these coins, plus we just had a washout of all the bad money, the leverage in the system. I think that just like we had a massive push to the downside, it's like holding a beach ball underwater, and we're going to pop up so big and there's going to be a news catalyst to come along with it, a narrative, and it's probably going to be with regulation, and it's going to be good for the space. So that's what I'm seeing. Crypto total market cap looks very, very similar to back here. And then even if I now go to, well, this is the 2-month chart. Look at that. Like very similar, guys. Like, you know, you pop, it's like kind of like a box. You go up, you go sideways, you go back down, you go up, sideways, go back down, retest like right back to where that was, retest right back to where that was. Very similar. And then if I go and I copy this pattern as well too, I'm going to go on the 2-week chart and we can see that. I'll grab from this top to this bottom, stretch it down like that. And I'll grab and I'll put it at this top right here, right? So see how, so this was 262 days, this is 220 days. See how this, I need to shrink this right now, and then it will look very clear. See, just like that, guys, just like that. And then if I go down to the 1 week, like it's right there. Yeah, guys, so I believe that we've hit our bottom in the crypto markets. Risk disclosure, if Bitcoin breaks 20K, Ethereum breaks $1,000, there will be one more pull down, and it will be an intense one. So that's a risk disclosure there. But as long as Bitcoin stays above 20K and as long as Ethereum stays above 1,000, these altcoins have a ton of room to flourish and bounce doubles, while Bitcoin, Ethereum maybe go up 10, 20%. I feel as if like Bitcoin and Ethereum time was last year. And I think I mentioned it earlier this year that it's XRP and XLM's year and the utility coins year. And we're going to see that come to light within the next couple months. So I'm going to make some more videos today. I'm going to push them out. I just wanted to keep this video to the dollar and to the crypto total market cap. What I'm seeing here looks very similar, guys. It looks very similar. It's very exciting because after these moments, after this washout happens, you can just say that these crypto prices will not reach these levels ever again. If this is the bottom, they will not reach them ever again. So that's it, guys. That's this video. And then I'm going to cover in the next video the XRP chart, XLM chart, and their dominance charts, as well as compared to Bitcoin, compared to Ethereum. We're going to look at the altcoin dominance. We're going to look at the Bitcoin dominance. And there's a lot of stuff happening in those charts. So I can't wait to share those with you guys. And that's it for today's video. So I'll see you guys in the Discord, and I'll see you in the next ones.